Thank you, everyone, and thank you for taking time out of your very busy schedule. We hope you find this to be informative. There haven't been a lot of tax law updates for this particular year. Sometimes it has to do with the cycles, sometimes it has to do with the being an election year. But I want to take the next 25 minutes, go ahead and run through the changes, and in some instances be able to show you how it'll look different in the tax return itself. Let's go ahead and take a look at the different things we're going to cover for the day. What we'll cover is updated tax inflation adjustments for tax year 2024. This is something we cover every single year as to what the standard deduction will be, mileage, those types of things. On top of that, we'll talk about retirement plan provisions and some changes that have been made. We'll talk to you about changes to the new clean vehicle credit for tax year 2024. And there's some changes that are involved, especially as it pertains to monies that can go to the dealership. Tax year 2024 federal reform changes to be aware of. We'll also go ahead and cover changes to returns with duplicate dependents. And this is going to be important when people are both trying to claim the same child as a dependent. Updates regarding Form 1099-K for 2024 and kind of beyond. When we're talking about the fact that people are going to start receiving 1099-Ks, it's something that we have to realize is going to be ongoing. Top of that, we'll talk about new reporting requirements for corporations, LLCs, and limited partnerships. And then we're going to finish up. This is a revisiting of what we did last year, but it's so important to understand your responsibilities to have a data security plan, which is often referred to as a WISP or a written information security plan. That's what we're going to cover. And again, as Justin said, if you have any questions throughout the presentation, please go ahead and type them, and we'll go ahead and do our best to get to the answer, to get you the answers that you're looking for. So let's go ahead and get started. We'll start with updated tax inflation adjustments. Standard deductions for this year, as you're working with your customers, your tax-paying clients, $14,600 for single or married filing separate. $29,200 will be for married filing jointly or qualifying survivor spouse. $21,900 for head of household. Also of note, the maximum earned income tax credit amounts will be as follows. $7,830 for 3 or more children. It would be $6,960 for 2 children. $4,213 for a child, and also of note, $632 for taxpayers without any qualifying children. Also of note, refundable portion of child tax credit will be $1,700. Next up, let's talk about mileage rates for this year. As you know, they always fluctuate based on the price of gas, those types of things. For this year, for business purposes, it'll be 67 cents per mile. For medical or moving, it'll be 21 cents per mile. And for charitable purposes, it'll be 14 cents per mile. The next thing we want to talk about is changes to the new clean vehicle credit for tax year 2024. Obviously, this is something that the government would like to really make sure that people are getting credits for purchasing a new electric vehicles. So there's a reminder that there is a $7,500 non-refundable credit available for purchases of a new electric or fuel cell vehicle that's under 14,000 pounds. Notice the emphasis is on the word new. We'll talk about used cars here in just a little bit. What's that mean? For 2024 electric vehicles, the $7,500 is actually split into 2 separate $3,750 or $3,750 credits. And it does so as follows. First of all, the vehicle's battery must contain at least 50% of critical minerals that were extracted or processed in a country that has a free trade agreement with the United States. On top of that, at least 60% of the battery's components must have been manufactured or assembled in North America. Now, you know, as a tax professional, how are you able to track whether or not a vehicle is eligible for this credit? First of all, you can visit fueleconomy.gov to see if a specific vehicle qualifies for the full or a partial credit. That's an important one to remember. You know what? You'll always want to look up the vehicle that somebody is purchasing. Continuing and beginning in 2024, continuing with this credit, the taxpayer can elect to transfer the credit to the dealership to use as a down payment for the vehicle. On top of that, an electric vehicle will not qualify for the credit if any of the vehicle's battery components were manufactured or assembled in a foreign entity of concern, that being China, Russia, or North Korea. And from all intents and purposes, we're talking about China here. Well, please note, the website that was on the previous page, you'll want to make sure you check because there are vehicles that definitely will fall into this circumstance, and you have to be aware of those types of things. Now, continue on the reminder of other requirements for the credit. First of all, the AGI limit, the adjusted gross income limit, is $150,000 or $300,000 for married filing jointly for current or previous year in order to be eligible for this credit. The price cannot be greater than $55,000 or $80,000 for an SUV or pickup truck. Okay, the price cannot exceed that and expect to get the credit. For fuel cell vehicles, the full $7,500 credit is available when the requirements for being powered by a fuel cell are being met. Also, information on the vehicle is required to be entered in Form 8936, which will then pull into Schedule A. Now I have the new program up here. Let's go ahead and take a look at this. Oops, hold on just a moment. There we go. And if we take a look, the Clean Vehicle Act 8936 Schedule A is what's going to need to be completed. This is in the brand new tax software, which will be coming out next week. Just wanted to make sure everyone noted this is where you would find the place to enter the information. Oh, what did we do here? Hold on, I apologize. Looks like we took a step back. There we go. Back to where we should be. Continuing on, reminders with regard to other clean vehicle credits for 2024. Again, just a couple of minutes ago, one of the things that I referenced is that there are also credits that are available for used cars and commercial vehicles. Let's take a look at those. First, with regard to used clean vehicle credit, reminders of the requirements for the credit. First of all, the credit will be the lesser of either 30% of the purchase price or $4,000. And please remember, it says the lesser of these two. On top of that, the cost of the vehicle must be less than $25,000. And the vehicle must be a model year that is at least 2 years prior to the applicable tax year. So as an example, for tax year 2024, which is what we're in right now, the model year of the vehicle must be 2022 or earlier. Also, the vehicle must be purchased from a dealership. So this can't be private party to private party. The adjusted gross income is $75,000 or $150,000 for married filing jointly for the current or previous year. The credit can be only claimed once every 3 years. That said, the credit is non-refundable and the vehicle must be purchased for personal use. Again, the information on the vehicle is required to be entered in Form 8936, which will pull into the Schedule A. So again, as you are doing this, if you're working with a customer, you go ahead and you'll pull up your schedule for 8936 and just put the A next to it. That's going to be the form that will be pulled up. Now, with regard to commercial clean vehicle credits, again, some reminders. First of all, the credit is calculated as a percentage of the cost of the vehicle and as follows: 15% for hybrid electric vehicles or 30% for electric or fuel cell vehicles. On top of the maximum credit is $7,500 for vehicles that are 14,000 pounds or less, and it's $40,000 for vehicles over 14,000 pounds. The credit is non-refundable, but any unused credit may be carried forward. As we said with the other ones, the information on the vehicle is required to be entered on Form 8936, which will pull into the Schedule A. Next up, let's talk about some changes to the forms themselves. A very important one on Schedule Form 1040. The 1040 itself, often we have tax professionals that work straight down the form. Other people like to just add the forms as they need them, but please know that there'll be a new line for filing status area for non-resident alien spouses, which I'm going to show you in just a moment. First of all, the criteria. For married individuals where one of the spouses is a non-resident alien or a dual status alien, the couple can elect to treat the non-resident alien spouse as a U.S. resident for federal tax purposes. What's that mean? When it's the case, there's a new line with a box to check along with the need to enter the name of the affected spouse. So let's go ahead and take a look, if we will, back at the term itself. Normally, we go ahead and we put our filing status in under the client data. You'll notice here, though, when we go to the filing status here, there isn't such a place for what we're talking about. So in this particular instance, you would actually go to the return itself, the 1040. And if I go to the 1040, you'll see right here under the filing status, check if treating a non-resident alien as a dual status. So you'll see the box does exist. You'll just need to go to the 1040 instead of simply to the client data. Next, Form 5695. There's a new checkbox that's been added, and that's found on line 7C. This box should be checked when a taxpayer qualifies for a residential energy credit and is jointly occupying a home with someone other than their spouse. Please note that there's a special rule applies that allows both the individuals to claim a credit if they jointly paid for the qualifying property. My apologies. So again, let's go ahead and take a look at the tax return itself. And you'll notice if I go to 5695, sorry, I thought I had added that before, but I can right now. And we would go down and you would see this new box will reside in its 7C. 7C, if the special rule for joint occupant applies, check here and attach a statement. Next, some federal form changes. On Form 4136, the fuel tax credit, there will be a new worksheet that's involved. This new worksheet must be completed and attached to the return itself. The purpose of this worksheet is to ensure taxpayers are aware of the requirements for claiming this credit and to provide the IRS with information on the business that is claiming the credit, including the purpose for which the fuel is being used. Next up, we want to this one's really, really interesting in this having to do with duplicate dependents. And the reason why this is so interesting is getting the proper information to the IRS in a timely manner can certainly help things out. In the past, when you were dealing with a duplicate dependence, meaning somebody has claimed someone as a dependent and then your taxpayer wants to do the same, it had to be paper filed. This has changed, assuming that there's an IP PIN involved. Allowing returns with this condition to be filed electronically. That's a big, big change. So first of all, let's start with the definition. The definition that we're talking about here is a return that includes a dependent that was previously claimed on a different filed tax year 2024 return. So you're working with the second party that's trying to claim the same dependent, and you know what? It's up to the IRS to make this determination. Well, you had to send that paperwork in not manually, but by snail mail. And guess what? For this year, there's going to be some changes. In the past, that return was rejected for this scenario and had to be paper filed. Beginning with this filing season, the return with this condition can be filed electronically as long as the primary taxpayer has an IP PIN. This will speed up the process for resolving the issue and who actually is entitled to claim the dependent in question. That's the important piece. Now, I can't speak to the turnaround time of the IRS, but we know that if you had to mail something in, it's going to take a lot longer. At least this allows the information to get into the hands of the IRS much, much faster because it can be electronically filed now. Okay. Now, continuing on, if the primary taxpayer already has an IP PIN, then the return will be accepted by the IRS. The taxpayer will only know there's an issue when he or she receives a notice from the IRS, so if they don't have an IP PIN. If the return rejects for having a duplicate dependent as tracked by the Social Security number, then the primary taxpayer must obtain an IP PIN in order to file the return electronically. So you want to make sure that your tax-paying clients, if this is the issue and they believe that they're entitled to that dependent, they will have to get themselves an IP PIN. Next up, let's talk about updates to Form 1099-K. This is really interesting because this is something that's evolving as we speak. It was last year, it is this year, and will continue to be the case. More individuals will receive Form 1099-K this year than ever before. The reason is the reporting threshold for third-party networks such as Venmo, Cash App, all those types of things will eventually be reduced to $600. So at the point that something's at $600, all of a sudden that's going to have to be reported. Well, this reduced reporting threshold was originally scheduled to go into effect last year. So we're already a year past that time. And as of right now, for tax year 2024, the reporting threshold amount will be $5,000. That doesn't mean that people still won't be sending 1099Ks, even if it's less than 5,000, because they want to err on the side of caution. So you can expect your tax-paying clients in many instances to start receiving 1099Ks. If they received them last year, there's a reason why. It's all in this buildup, if you will, because they want to bring the numbers down to $600 eventually as being the reporting threshold. So continuing on, for tax year 2024, the following 1099K income that must be reported on return includes the following: amounts from selling goods or services for a business. On top of that, income received from renting property and selling personal services for a gain. All of those now fit under the criteria in which 1099K income has been established. Now, 1099Ks received for sale of personal items at a loss, or when a 1099K is received in error, what do you need to do as a tax professional? You still need to report the total amount from the 1099K on the new line at the top of 1040, Schedule 1. We can go ahead and take a look at that right now. If I go back, we can go to the 1040. In fact, what I'll do is I'll go ahead and I'll add a form. And if I go ahead and add 1040A, Schedule 1, there it is. You'll notice that it's right at the top. This is where you would report 1099K information right here. Okay. New reporting requirement for corporations, LLCs, and partnerships. Please note that under the Corporate Transparency Act that was enacted in 2021, all corporations, limited liability corporations, or limited partnerships are required to file a beneficial ownership report with the Financial Crimes Enforcement Network beginning at the beginning of this year on January 1st, 2024. So what's that mean? It applies to all corporations, LLCs, limited partnerships, and any entity created by filing a document with any state. On top of that, companies already in existence on 1/1 of 2024, in other words, existing companies, they have until the first of the year 2025, which is of course right around the corner, to file their initial report. On the other hand, new companies that actually were formed during 2024 or anytime after December 31st, 2023, they must file within 30 days of when they were created or registered. This is an important thing for you to know as you're working with your customers, especially business customers of yours. Now, the last thing that I want to cover is a revisit from last year, but it's so important to understand that more and more the IRS is really looking at this with scrutiny, and that has to do with your responsibilities to establish a data security plan. We have seen, the IRS has seen more and more situations in which people's accounts or people's software has been jeopardized. And because of that, they really want to bring it home that every single tax professional that's out there has a responsibility to have a data security plan. By federal law, literally, all tax preparers are required to create and implement a data security plan. And what's meant? This is referred to as the Written Information Security Plan. Every single office should have one. With regard to that, the Security Summit, which is a group that works on these types of issues, created a sample security plan to help preparers, especially smaller practices, create a plan to help protect their data and information. Almost a template, if you will, to make sure that people have everything that they need to make sure that they're meeting the requirements of the security plan. In order to be compliant, guidelines and specific requirements can be found on publication 5708. I'm going to make reference to this a couple of different times because that publication is going to give you all the information that you need. So check out the following for further information. I just said 5708, but also the data theft information for tax professionals that can be found on the IRS website. So you can go to the IRS website and just type that in the search field, or again, go straight to publication 5708. And in either instance, you're going to find valuable information of the things that you need to do to make sure that you are adhering to the responsibilities as a tax professional with regard to creating a security plan for your data. Now, That brings me to the end of the presentation as far as updates that we have. Please note that a couple of other things, we do another one of these presentations right before the tax season starts because there can be some things that change between now and January. So as Justin had said earlier, if you look at the webinar schedule, there will be a second one. It is in January and will happen right before the season starts. It's always worth it to check to see if there have been any changes that have been made.